everyone, and welcome back to the Dakota Fundraising News Podcast, our second episode of the new year. Today is Friday, January 10th. We are pumped to be bringing you this from a frigid Philadelphia. It was feels like of 8 today. Did you walk in?
I had to pay for an $18
You Ubered
Uber.
in? Dude, come on. I walked in, toughed it out, put gloves on, hat on, rewarded myself with a breakfast sandwich, and now I'm rewarding myself with some fun news that's happening out there. Konch, talk to me a little bit about these private equity firms and how things might be changing as far as what they're allowed to do.
Yeah, for sure. By the way, nice frames. Dig them. I don't know if I've seen those yet.
Blue light. It's all fake.
I need some of those, honestly. Eyes are getting old. But yeah, man, I was reading an article this morning from the Financial Times. I think they published it yesterday. But they were just reporting that, private equity firms like Blackstone and Apollo, they're, really lobbying for access to 401k funds, trying to get these retirement funds to invest in private equity. Obviously a lot riskier, but with the new administration coming up, it'll be interesting to see what that looks like here in the coming months or year. So more to come on that. Obviously we talk a ton about retirement systems here on the podcast and private equity and other alternative investments. So definitely large pools of capital if firms like Blackstone and Apollo can get access to.
Yeah, and it tracks funds with what we've seen over years of just retail investors demanding access to all with the private wealth boom. Obviously, everyone listening to this certainly knows that private wealth managers are investing on behalf of their clients in alternatives a ton. So in theory, why wouldn't 401k plans be able to do the same? Probably can guess my opinion on it, but I would love to have some alts in my portfolio personally. But yeah, it is obviously important for individual investors to understand the risk. We're probably a little better suited than the typical individual investor to understand the risk, but it'll be interesting to see what happens there. Big changes coming, and big changes in the job changes world too. .72, Uncle Stevie, the owner of the New York Mets, famously, and the hedge fund manager, .72 Asset Management, Steve Cohen, has hired a former Blackstone senior managing director, Todd Hirsch, to launch and lead a private credit fund. That's really interesting. I would think a firm like that would have been a little earlier to the private credit race, but interesting to see what he does. And he's obviously a brilliant investor, so it'd be cool to see what happens there. And then on the RIA side, before I hand it over to you, in Seattle, a place that I love, that I've never been, Badgley Phelps. Badgley Phelps, an RIA out there, roughly $5 billion under management. They've appointed a new research director. That's Tim Thomas. He has actually been named CIO. He was a research director, for the mistitling there. He is going to be succeeding Steve Phelps. I'm not super familiar with this firm, but Badgley Phelps, Steve Phelps, probably safe to say that person was involved in the founding of the firm in at least some capacity. So interesting to see Tim Thomas step over. I wonder if it'll be called Badgley Phelps Thomas at some point in the future. We'll, if there's a name change, you all be the second to know, because we'll be the first to know, and then we'll tell you.
Yeah, I joke with our sales team and our data team here that these firms are very creative with their names.
Yeah,
wouldn't be surprised if that's the name they come up with. I'll close this out with job changes here. Schroders, they're naming Philip Chandler as the new CIO for the SIS, Schroders Investment Solutions. This is their actively managed model portfolio and multi-asset funds with around $7.8 billion approximately in assets there. I guess kind of similar to job changes, though, going back to RIAs as we move into the RIA segment here. Savant Wealth's $28.6 billion RIA. They have named their investment strategist, Zach Ivey, to CIO. Ivey joined the firm back in 2003 when Savant acquired Bridgeworth Wealth Management, a Birmingham, Alabama-based RIA. Staying with the RIAs here, Sanctuary Wealth, they have secured a $700 million RIA, Hilgard Wealth Management. This is a team coming out of Miami, previously over with Truist. They're led by their leaders, Marcelo Zaffaroni and Juan Martin Campuzano. I'm on a roll here, so we'll just close it out with LPL. I think we just talked about them on the last pod, and I'm sure we'll talk about them a ton this year.
If you work for LPL and you happen to be listening, we talk about LPL in every episode, and we'd love to have you on as a guest.
I don't think we've had them on any of our podcasts or anything. That'd be a good one. But yeah, they're recruiting a $320 million team coming over from Osaic, based out in Oregon. This is the father-son duo, Llewellyn Financial Management, led by Bart and Alex Llewellyn.
Yeah, I love it. I will jump into our searches segment. Start in the Midwest in Wichita, Kansas, actually. And that's an important note that the Kansas City Chiefs will not win the Super Bowl this year. You've heard that here first.
I feel like Kansas is a place that you've never been to that you also love.
I don't know if I would like that one, but yeah, it is directionally. Yeah. You're right. This one's more of an update. Wichita Retirement System. They have had a search for a fixed income manager for some time now. They did select PGIM as the manager for the Core Plus fixed income mandate. Fidelity was also considered with the FIAM Core Plus fund that they offer. North Carolina Retirement System in Raleigh. If you all haven't, I'll just keep the sports mattering it in, but if you all haven't seen Cooper Flagg down there at Duke, I mean, it's pretty incredible what he's doing. Hopefully the Sixers tank for him at this point. But anyway, the North Carolina Retirement System, back on topic, they have reviewed their portfolio for this year. They are underweight a handful of things that they have been targeting in the past. And in order to change that, the portfolio priorities going forward this year, they are going to focus on SMAs and special opportunities for co-invests. They're going to look to maintain their exposure across senior secured debt, and then they're going to revisit a dislocation mandate and increase their real estate debt exposure. So exciting to see some big changes happening there.
Yeah, nice. And that's for their opportunistic fixed income portfolio, if we didn't mention that. I will give a mention of Ohio Police and Fire Pension, close to $19 billion in assets using Wilshire and Townsend as their consultants. They've released a couple different commitment plans for the year for real estate, real assets, and also for private equity. In real estate, they use Townsend, as I mentioned. They're looking to commit $230 to $280 million to non-core investments this year. Target sectors with strong fundamentals or distressed pricing, trying to keep their core exposure near 30% there. On the real asset side, also leveraging Townsend for this, they're looking to commit $80 to $180 million this year, prioritizing infrastructure investments. Also looking to explore timberland and agriculture investments as well. And then on the private equity side, they're looking to target $195 to $225 million in new commitments. As always, once we learn about where they're allocating their dollars this year, we will let you guys know.
Yeah, I love it. Speaking of allocating dollars, Teachers Retirement of Texas in Austin. Now that is a place that I have been and love. They have made a ton of recent commitments. Buckle in here. I'll run through some of them as I'm looking at this list. I'm not going to run through all of them, but I'll run through some of these. They've made a $400 million commitment to Blue Owl for their real estate fund. It's opportunistic real estate. Also across real estate, they've made allocations to AEW, to Guadalupe Partners, to Two Sigma with their real estate fund. It's actually a relatively recent launch for Two Sigma, which is pretty fun. I think it was, obviously Two Sigma famous for being a world-renowned hedge fund, but they did launch a real estate fund, I think the end of 2023. So it would have been before this podcast, but we know some folks over there. Great firm. And then across private equity, they've made some allocations as well, notable ones to Becklar Holdings. That's a partnership. It's a middle market buyout fund. Very large allocation to Northampton Capital Partners, also middle market buyout. It's a $150 million fund. And then to the Brigham Royalties Fund 1. That is a $75 million allocation. I'm not familiar with Brigham Royalties, but TRS of Texas does have a pretty robust emerging manager program. So there are a lot of Fund 1s here that they've made allocations to at the end of last year. So if you are a emerging fund or a Fund 1, someone to maybe target.
Awesome. Yeah, we'll shoot over to the Midwest, place that I hold very close to my heart. Used to live there for a couple of years, but Macomb County Retirement System, $1.2 billion in assets. They leverage Mariner as their consultants. Quick shout out to our colleague Morgan Holycross. Her father, Mike Holycross, is the consultant for the plan there, based out in Detroit metro area. They've also made a real estate allocation recently at their December meeting. They disclosed $10 million is going to be going to Mavic Real Estate Special Opportunities Fund. So congrats on the Wyndham Mavic.
Cool. We'll wrap it up with the fundraising updates today, but events update, TBD on our LA event next week. If you're listening to this, obviously, we're thinking about everyone in LA. I have close family in Orange County. They luckily are safe down there. So if you're in LA affected by any way, just know we're thinking about you over here. There'll be an update going out to anyone registered to our LA event with what we decide as it gets closer. But on a much positive side, last night we had an awesome event in Chicago at the Soho House. Over 100 people attended. Again, if you're not getting emails about those events, you can go to Dakota Cocktails. You can actually just Google that, or dakota.com/cocktails to see all of them. But anyway, let's wrap it up with fundraising news. First, the growth equity investor FTV Capital has successfully closed on their 8th flagship fund, and also across a new vehicle that was dedicated to smaller investments. That's going to be called the Ascend vehicle. I always love those names. JLL has JLL Spark. FTV has FTV Ascend. It just feels very like Silicon Valley. But anyway, $4.05 billion across these two funds, with $3.4 to the flagship fund. It was oversubscribed. That's flagship fund 8. And then that new vehicle, Ascend 1, was also oversubscribed, $651 million. Both are seeking to make investments in enterprise and fintech. Last, we'll just talk quickly about Stockbridge, residential-focused real estate investment vehicle. They have launched that fund according to a January 7th filing, and they are aiming to raise $550 million. I just mentioned Silicon Valley. While this isn't a tech company per se, they are based in San Francisco. So something to keep in mind if you happen to be an allocator listening in, go and check that out. Most recently, the firm closed a fund that, according to our data in Dakota, has had over $700 million in capital commitments. That was the 5th version, so now they're on Fund 6. We talked about TRS of Texas, but Texas Municipal actually allocated over $12 million to that fund. So exciting to see that.
Nice. Yeah, we probably called that out on previous podcasts too, if that happened when we started this. But yeah, the LA stuff is crazy. I was just driving down the PCH in Malibu a couple months ago, and now it's up in flames. So hearts out to all of our customers and listeners and anyone else out in the area. Hope you guys are staying safe. More to come next week on the podcast, though. Hope you guys enjoyed the episode. Any feedback, please let us know. Pat, anything else?
Yeah, just one more thing. Obviously, shameless plug. If you have enjoyed the podcast, if you've listened to us, we're coming up on a year. Maybe we'll have a celebration. We'll at least go out to dinner. If you enjoy the podcast, follow, like, subscribe, share. Follow us on LinkedIn. We're sharing a lot. I actually shared a little blooper from last episode, so you get the chance to see cool behind-the-scenes content like that on our LinkedIn. But Spotify, follow. Apple, I don't use it. I think it's called follow too, but
I think so.
Just follow, like, subscribe, rate, and review, all that good stuff. Thanks, everyone, and we'll talk soon.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.